Hello everyone, Tim Knight here, and wow, what a week we've had. I'm going to do my usual thing where I show you all my positions, but instead of encroaching upon the first video, I'm doing something unusual. I'm just going to make an independent video about the indexes in general. As always, I want to encourage you to get a premium membership. They are as little as $9.95 a month, and in the upper right corner of the website you can see where it says levels. You can see the different levels of membership and what they include, but that is what keeps the site going and development going, new products, new features, and me. So yeah, as always, half of the charts will be strictly for gold and diamond members this weekend, and the other half everybody gets to see, and everybody gets to see this one. So let's walk through, and this is, as always, kind of unscripted. I'm just going to kind of say things as they occur to me about these different indexes. This is the Dow Jones Composite. We're here in kind of an outer space view, many decades of information, and you can see the various tops that took place. We have, and this one, it's funny, I didn't even mark this one just because it's, ironically, in spite of all the bluster about the bear market of 2000, it was not very impressive on the long term, not much of a top, but we did have it was a bear market. And then the clear top here is the financial crisis, of course. My view is that the top that should have taken place was right here. Very well formed, and it got aborted at that trend line thanks to a new Fed intervention. So until such time as this line is broken, we're still in a hocus pocus never never land. But, you know, we're getting there. Maybe we've got a chance. Depends on how much or even how effective the Fed's tools are, given the $21 trillion in debt and the $1 trillion a year growing. And, you know, basically we are headed for apocalypse. It's just, you know, how far can they possibly forestall it? So anyway, zooming in, we see a really fascinating thing happening here. We had peaked back in January and looked like we were starting to weaken, but this was very brief actually. It was really just like 3 particular days of selling, and then it was all over. And then we started into this uptrend, this channel. And of course this was the real heartbreaker here from July 2nd, just up and up and up and up to a new highest point in history, and September 21st. So this was miserable, and then that started to all go to hell. And interestingly, we got a break of this channel late-ish in October, and we got way below it, and then sprung up. And I didn't even just notice this just till the second, hit the midline like precisely, I mean to the pixel, and then was repelled back toward a higher low, and then again an assault, almost got to the midline, and then a repulsion again. So we've been in this range right here ever since this big down day on the 10th. So we've been in a range in this particular chart from about 8,100 to about 8,700, and we're at the lower portion of that range now. The bullish argument, which is completely plausible given this information, is that it's time for another V-shaped rally back toward that midline. And it could happen. Trump is probably, in spite of his bluster on Twitter, he's probably losing his mind as the financial markets are looking so shaky, and the sort of Damocles is dangling over his head with the Mueller thing. And so who knows what the government will do or say at this point to try to buy themselves a few more days to pretend that things are fine. So we could well have another V-shaped rally, as we have had a couple of times recently. The bearish side, the white hats as it were, could argue that this channel is broken, and the next phase will be to work toward this trend line down here, this area down here, which is the bottom of this trend line. And interestingly, the bottom of this former resisting trend line. So somewhere around this vicinity. As I've said on Tasty Trade, we need an event with a capital E to wrench us out of this range to the downside. And who knows what that event could be, but it could be a dramatic escalation of the trade war from China's side. It could be a legal bomb from the investigation. Who knows? So, but it would take some. I mean, God knows this weekend something could happen. I don't know, but it's going to take something to wrench us down to A, out of this range, and then B, ultimately to break this cursed trend line. So I'm not going to spend as much time on the other indexes as that one. That's just kind of a very broad overview. Here's the Nasdaq Composite. Now, likewise, we have not broken the trend line. This has been in an uptrend thanks to fakery from the government since March 9, 2009. And when this breaks, all holy hell is going to break loose. Because my view is that we have delayed this so badly that 2008 is going to look like a children's birthday party once this really gets going. It's going to be fun. It will give meaning to the past 9 years. So, but we haven't done it yet. We're still in an uptrend, and shorter term, we've been tracing a series of lower highs and lower lows. Now, again, let me argue for those bastard bulls. You could easily make the following argument. This is an inverted head and shoulders pattern in the making. We've made the bottom for the right shoulder. Friday's close would be the greatest time in the world to have gobbled up every Nasdaq stock you can imagine. And we're going to go zipping higher to complete the pattern, and ultimately will be far, far higher than this. We're just going to cut above all this stuff. And all the investment banks would agree with that, because I've seen their projections for next year, and they all begin with the digit 3 on the S&P 500, 3100, 3200, etc. So that's the argument there. We have not broken the trend line. It's simple as that. We are basically like here. We're right close to the bottom of the trend line. So that's the bullish argument. What else can I show you? The Russell 2000 has been interesting. This, of course, was a magnificent top back for the financial crisis. And regarding the Russell 2000, kind of the same deal in that we have not broken the trend line. However, a little bit interesting, we have gotten below this horizontal. This is a pretty not terrible head and shoulders top. It's not as glorious as this one, but it has the prospect of providing enough power to push through this trend line. So that's what we need to watch for. It wouldn't take much. Another day like Friday would absolutely do the trick. We shall see. Semiconductor Index, I'm still very excited about. Diamond pattern's fully in place. But again, I'm trying to be, like Fox News, fair and balanced. We have another higher low at the moment. It wouldn't take much to break that, but thus far, this is our third instance of a thrust lower, and each one's been a little bit higher than the prior one. So it's still not completely doomed for the bulls, but one modestly weak Monday would do the trick. Let me just finish up with the S&P. Why not? We are miles and miles and miles and miles above long-term support on the S&P 500. We have broken, past tense, this trend line from March 6, 2009. So that is done. Interestingly, the kind of peak on Thursday evening / Friday morning was just under the broken trend line. And so the simple fact is that the next stage is to break below this lower portion of the channel, which again would take a very modest Monday. And I want to emphasize, if Monday's modestly down, it's not going to stay modest for long. because a decent down tick would break so many core lines that I think you would just see it accelerate. So anyway, a very great week, and now I'm going to go through the 80 different short positions I've got in the other videos. See you there.